Nvidia earnings are out and they beat the street's expectation of $5.14 per share with $6.12 per share. That's up about 44% on a quarter-over-quarter basis, and the stock is holding higher in the post-market after the press conference from Jensen, who mentioned that demand far outweighs supply for Blackwell. That's their latest and greatest chip, perhaps more appropriately dubbed as an ecosystem. He cited continued growth due to multimodal AI, meaning not just text, but image, video, and voice generation, think about GPT-4o, and the promise of a mystery chip in the pipeline reinforcing the annual release cadence. Oh, and that's not to mention the 10-to-1 stock split announcement. So from the current price in the post-market, around $1,000 per share, it will drop down to $100 per share, making the stock a little bit more approachable when it comes to options trading. And this is happening after the close on June 7th, so mark your calendars. If you're a longer-term shareholder of Nvidia, the valuation does not change. You'll now own 10 times the number of shares at 1/10 the cost. This is not a reverse split where they're issuing new shares and diluting the ultimate valuation. That's all great fundamentally, but let's dive into how we should trade this tomorrow morning, and then we'll move into the broad market. For some context, on the left-hand side of the screen, we've got the daily time frame chart with the implied volatility rank study as a lower. We've also mapped out the lower and upper edges of the market maker expected move. And on the right-hand side of the screen, we've got a 15-minute time frame chart with the extended hours turned on here so we can see the earnings move. The first thing that we'll point out is that implied volatility rank is elevated, but it's not as high as it was during the previous earnings cycle, as you can see from over here. Here's the gap up on earnings, and there's the collapse out of implied volatility. It doesn't mean that there won't be a collapse out of implied volatility. There likely will be, but it does just mean it's likely not going to impact things as much as the prior cycle. So I would still give this about 5 minutes after the opening bell to let implied volatility settle out and move in the downward direction and not get caught off sides by paying an exorbitant amount for that increased volatility. So first rule of thumb, give it about 5 minutes on the open. Second rule of thumb is going to be that gap rules are going to apply, and as of right now, the overnight high is currently aligned with the upper edge of the market maker expected move, making our job pretty straightforward here. So rule number one when it comes to gap rules is that if we see a test and failure of the overnight high, which again happens to align with the upper bound of the market maker move, then we are looking to short Nvidia for a fade underneath the opening print for a target down to the previous high of day. The previous high of day is going to be loosely around 960. It's not 950. You can see over here, prior high of day, 959.81. Okay, so let's just call it 960, and your risk reward on this trade looks something like this. Your stop loss goes over the high of day, your entry is short through the opening print, and your target is that previous high of day. There are a couple of issues with this assumption though, and the first big one is that the previous all-time high is going to act as a massive retest area. So in my view, more appropriately, your risk reward might end up looking something like this on that initial idea. Now, this starts to unfold as loosely a 1.5, 1 1/3 to 1 risk-reward ratio, which can tend to be fairly difficult. I'm not sure that I would want to have that play out as a possible trade setup. And instead, if the market does fade, I would not want to be short Nvidia for the fade. I would understand that this is likely the situation that can unfold to get us here, but instead, the higher low on the retest of the previous all-time high makes a lot of sense on the daily perspective. So I would look for daily buyers at the previous all-time high here on a retest of 972. So let this come in, let it do its thing, let the overnight inventory correct. That's basically how the gap rules work, right? We're looking to exploit these pajama traders long late to the party. If they're going to correct, if they're not going to be paid on the open, aka the failure of that overnight high, then great. We'll look for the stock to come in a little bit. The first area of support is 972. When we get down here, we will put our thinking caps on and say, okay, can we spot the double bottom? Can we spot the inverted head and shoulders? Can we spot the hammer candle at or around 972, the prior all-time high, to see if we get buyers stepping up there, and then what would the target become? The target on that move is back up to the opening print of whatever that might be tomorrow. So the first traded price, the opening print of tomorrow's session, is going to be your target. So let's just say that this ends up being the opening print here. Your risk reward would look something like this. You're trying to get long at the previous all-time high with a tight stop and then trade back into the opening print. If you could pull that off as a 3-to-1 risk reward ratio, that's looking much more attractive than the fade with the full move to test the upper bound of the market maker move, the overnight high, the move down through the open, right? And then you have to contend with this. The short and the fade seems a little bit dicey just based on risk reward. I would prefer to be a long trader out of Nvidia looking to support over 972 prior all-time high. So we're pretty straightforward on that potential trade. If we're failing this overnight high, we're looking for the fade. We're interested in support here, very straightforward. If the market ends up moving over 925 with a higher low over the overnight high, I'm very much so aligned with a gap and go due to gamma squeeze and options positioning via this market maker expected move. If this is where the market maker was expecting the bounds of Nvidia to be set, you have to imagine that they're likely short some sort of calls above, and if that's the case, they have to hedge their positions by buying the underlying. And if that's the case, that is going to cause a potential gamma squeeze. So over 1025, 1024 with a higher low, as long as we can manage risk as small little intraday traders, right? We're not going to pretend that we're doing anything other than riding the coattails. If we can spot the risk-friendly entry here with a tight stop loss and a move into blue sky territories, I would look to align long over, once again, 1025. So it's pretty ideal right now that the upper bound of the market maker expected move as well as the overnight high are aligned at that level. So once again, a rejection below keeps market makers happy. Nobody's off sides. Fine. Things can fade. Retail, who's late to the party here. Pajama traders, let's put them underwater and let's look for the stronger pullback into 972. If we crack this to the upside, looking for the higher low above, this is our risk-friendly entry. This might happen on something like a 2-minute chart. It might be a very, very quick retest of that overnight high, but we're looking for the gamma squeeze to continue in the upward direction. The trade would be off the table if you looked over the overnight high, the upper edge of the market maker expected move, and then failed underneath with a lower high. So this would bring up a potential secondary short, where if you can spot this lower high after a failure, and don't get me wrong, I'll raise my hand and I'll say, hey, we stopped out of longs, right? This trade did not work. We stopped out. We're not going to pretend that we get it right every single time. But if you can spot this and you want to test out a secondary entry, if you're willing to take another stab, you could look for short here with tighter risk reward because the short's no longer through the opening print. It's on the lower high underneath the upper edge of the expected move. Then what's the target? It's still going to remain the same at 972 on the downside. You can see how this risk reward becomes much more attractive. So in my view, those are the two key watches to be thinking about out of Nvidia for tomorrow morning's open. First and foremost, give it about 5 minutes to let the implied volatility settle out. Secondly, are we above or below the upper edge of the market maker expected move, the overnight high? If we're below and we're underneath the opening print, I would be thinking about inventory correction and a retest for a possible daily higher low up against the prior all-time high, 972. If you get a strong opening drive to the upside with a higher low above, thinking about gamma squeeze based on the market maker's positioning around 1025 in the upward direction. Once again, if the pullback happens, you're looking for double bottoms, all the classic entries we typically talk about. If you're underneath 972, it's not the end of the world. You can still be thinking about a gap fill reversal over 960. 950 is the breakout point of the daily chart from this balance right here. You could still be thinking about that higher low, but my target would not be as aggressive back into the opening print of the day's session. If we do end up fading more aggressively for something that does this, you can look for that bottoming reversal, but your target must be the previous all-time high. The worst thing that could happen for Nvidia right here, right now, is some sort of gap up that fails, it moves underneath the previous all-time high, and then a daily lower high is set underneath. What does that start to emerge as? Once again, you've got this huge failed breakout into blue sky territories. Maybe people are dialing back expectations on how Nvidia will continue into the future. That's, again, pretty detrimental for the structure of the chart. You ideally want to see a hold over 950 and then a poke back above, or just some sort of higher low over the prior all-time high if you're looking for continuation in the upward direction in the first place. So that's my explicit game plan for Nvidia. Let's see how this is impacting the broad market. So on the SPY daily time frame chart, we can see right here that there's currently not the intent of a gap up. We're trading 530.80 by 531 flat in the post market in the S&Ps, putting us right around the highs of the daily balance range, which brings us to our next point. is that the daily chart has really not been doing anything other than going sideways in a balance range, and if we add in some context, this starts to emerge as a daily bull flag. So we really just want to keep it simple out of the S&P 500. There's no reason to overcomplicate things here. If we break to the upside, the upper bound of the weekly expected move could be a possible target at 535.15. That's also loosely a range double in the upward direction. If we can get that follow through, it would make sense from a measured move perspective. To keep it simple on the downside, it would really require a breakdown underneath 528.40 with a lower high to really be searching for that daily higher low, which was the main component of one of the theses from the Saturday weekly watch list update. If we take it on down to the hourly time frame chart, I do want to talk about the breakdown that occurred during today's trading session. At first glance, it was like, oh my goodness, what's going on here? FOMC meeting minutes came out and boom, the market was lower, rebounding a little bit into the afternoon, unable to recapture technically the origin of the breakdown there. However, in the post market, again, we've got to give a little bit of credit where credit is due. We're currently trading up here based on Nvidia's earnings. So with that understanding, I would tend to think that this was just a flash in the pan, and we just saw this as a daily lower wick anyhow. If we get consolidation over 530, the setup lives on, and this is the primary outcome into the end of this week, looking for a break and higher low over 531.40 for new all-time highs and blue sky territories. If for some reason headed into the bell tomorrow we end up opening down here, so be it. I probably don't envision that as a primary outcome considering what's going on with Nvidia. However, as we talked about from the daily, no need to overcomplicate this thing. Just wait patiently for the lower high underneath 528.40, and then maybe there's some follow through in the downward direction. The reason I would still not give the upper hand to the sellers at this point is because of this interaction from the Friday session of last week. Remember that there was this long-standing balance early on in the session. We saw a liquidation break, and we ended up closing near the high of day. Notice that on today's breakdown, sure, it's a wall-to-wall move from the top of the balance to the bottom end of the balance, but look at how we moved underneath 528.40, that shelf of support here, did not find any acceptance from the sellers once again, and then closed more so towards the midpoint of the balance range. And once again, we also know that we're opening up here away from the closing print. So I would tend to have more of a bullish edge here in the S&Ps compared to a bearish edge. To keep it simple, we know that this is a primary outcome that's really top of mind, and a really back pocket situation would just be, okay, bears get the consolidation here, but please prove it to me with the lower high underneath 528.40 before we're aiming at more aggressive shorts to close the gap from down here, which of course was caused from CPI last week. Let's take a brief glance over at the market internals. If you're not familiar with this screen, check out the video tutorial in the top right-hand corner. You'll notice that volume flows were technically out of the market on today's session, but were they substantial? The answer is no. If we look at the advanced decline line, did we ever get into trend lower zone here? The answer is also no. Now, I will concede, because we've really been touting this indicator recently, the index score did get squarely negative into the afternoon, but as we were consolidating prior to the breakdown, it's not like the exchanges or really just the intermarket relationships were all that bearish. It was a bit more neutral than anything else. If we look at the cumulative build, it did ramp into the close, which once again, I'm not trying to deny the selling pressure that occurred intraday, but just why was there no follow through on that SPY chart for some sort of lower high down here underneath the 528.40? It's a little bit of a head scratcher. If you're a stronger seller, you're just definitely not getting the follow through out of this market that you're likely hoping for. And with Nvidia earnings being positive right now, again, I would tend to think that this is a primary outcome into the end of this week. Let's take a quick look at the market profile for the ES, and this reinforces the idea that stronger sellers really didn't have it going on. The main takeaway out of the market profile is to just understand that the point of control is in this upper distribution. If you were to separate this into two distributions, here's your upper and here is your lower, separated by a very, very small string of single prints there in I period. Point of control and value area is predominantly in the upper distribution, showing us once again that sellers were unable to commit substantial volume down towards these lows. New money sellers were not getting aggressive there. You had a lot of consolidation near the highs, and it did not end up turning into overhead supply. So to me, most of the data points as of right now stack in the bulls' favors. If you're not familiar with the market profile, check out the video tutorial in the top right-hand corner. Back on over to the the platform. A couple of very brief comments. We'll keep it brief in today's episode. Notice that the SMH still leads the pack here. The tech sector leads the pack. This is likely going to continue with Nvidia earnings. If we check in on these charts, you'll notice here in the little bid-ask spread for the post-market, 242 in the post-market, which is a new all-time high. That, of course, is bullish for markets. XLK also moving in the upward direction up towards 216.50 in the post-market, new all-time high. Yes, as of right now, once again, that is a bullish indication. If we look at financials, this might be a small threat into the end of this week for just minor downside pressure. If you happen to get the stronger breakdown underneath 42, let's take a look on the hourly. So something that really sets that lower high here and continues. Notice that this is obviously not going to get any of the help from Nvidia. It's still pretty much closed and is trading in the post-market right where it's at. If you're underneath 42, it might be a little bit of a drag to counterbalance some of the bullish nature from the XLK and SMH. Let's move on over to interest rates as well. I've got a hand-picked number of data points to be thinking about here. Interest rates are offering a lower high, and I'd be really interested to see, no pun intended, as to whether or not this can make an equal low and break down through the key area that we've been tracking at 43.33. If it does, that's going to act as a tailwind for a higher market in equities down below. So that's of interest. There is a small divergence unfolding in the HYG credit spreads. Notice that we did make a lower low out of the HYG versus the SPX down here. It's got an equal low. And as of right now, the indication is for a breakout of the balance on Nvidia earnings. It's a small head scratcher. It's not enough to go out and say, nope, we're shorting the market. This thing's going to zero. That's not how that works, but it's something that you need to at least be aware of. Another thing you need to be aware of is new highs versus lows technically has made a downtick this week. I'm not really all that off put by this. If we take a look at what's going on in the RSP, as long as that remains positive out of breath, here's the RSP equal weight. We've got to remember that the S&P 500 is a market cap weighted index. So we want the heavier weighted components actually outperforming. That's really what drives the return there. So all this is showing us is that the index is doing its job, right? The heavier weight components are driving the return. Some of the other components are kind of lagging. We don't want a huge divergence, but again, it's not the end of the world here. It's not enough to go out and say, oh my goodness, time to short the S&P 500. Let's take a brief glance at volatility here via the VIX futures spread. This is continuing to work its way into a strong contango. Now that Nvidia earnings are out of the way, I would imagine that the one-day VIX also backs off in the downward direction, which will be bullish for equities as a whole. Let's quickly take a look at the QQQs and see what's going on from a NASDAQ perspective. Obviously very similar to your XLK that we were just looking at in the post-market. It's higher here, trading up around 457.82. That, of course, is blue sky territory, so keep it simple. Any gap fill reversal over the prior high of day is very constructive at 456.75, moving back into blue sky territories, targeting the overnight high, the opening print, the whole 9 yards. All good here. Bulls remain in control. We do have an hourly uptrend with lows, higher lows, and along the way highs, and higher highs happening over here. The small caps are not getting as much love, and you can see a stronger breakdown into the afternoon out of the IWM Russell 2000. But if you take a look at the daily time frame chart, one of the interesting things that's going on here is that we've flushed through these very equal lows on the daily, and we've moved into a retest of this breakout point from in here. I would love to see the Russell support over 206.25 if we're going to be firing on all cylinders in the S&P 500 into the end of this week. Support here is pretty crucial, and that would be a huge tailwind, a bullish tailwind for the S&Ps if we were to find those buyers. So 206.25 key level into the end of this week. If we're above, still remaining bullish and optimistic. If we're below, starting to change tone a little bit more so. Instead of going through the core list, you can tune into the pre-market prep for tomorrow morning session at 8 o'clock, but I do want to have 3 additional trade ideas to share with you. So Visa is up first. What do we see out of V? You'll notice that if we break down through these equal lows, that's underneath 274.65. We've got a thin structure retracement into this set of lows down here at 269.50. We've got a fairly downward sloping 50 SMA. The trend is certainly down in the short term with highs, lower highs, equal/lower highs, lows, lower lows, lower lows. Again, if this one goes, your thin structure retracement is looking fairly interesting. Notice the inside bar on today's session, inverted hammer there. If we take a closer look on the hourly, very clear as a potential double top underneath the neckline with a lower high. There's not much going on here until we come into this congestion at, once again, 269.50. So that's your first idea. Next up is Gilead. So GILD is the ticker on that one. And this is a bit of a bottom fishing play. If you take a look at what's happening here, possibly a cup and handle. We put this out over on X not too long ago, and over the 68 handle, you could start to see a retracement into the origin of the breakdown where we did a little bit of a dance for a lower high there at 69.75. 125. So not the greatest range to be trading for, but a cheaper alternative in the healthcare space. Again, your cup and handle is the idea in force. As long as we're over that, or as long as we're consolidating in this range, the setup will remain in play. And finally, we've got Qualcomm as well. And this is not so much a trade that's in play currently. I think it already played out, but this is more of a promotion for our X account. If you're not following us over on X, check out the post that we have up on the screen now and look at the after. So you've got before and you've got after. Beautiful inside bar setup breaking out into blue sky territories. Again, a little bit of cherry picking here. This is one of the trades that happened to work out quite well. We don't get them all right, but it's certainly going to be beneficial if you follow us over on that platform. And that's all I've got for you during today's session of the Midweek Market Update. If you enjoyed the format or learned something new on today's episode, let me know down below in the comments section or by giving the video a very simple thumbs up. Reminder, we will be live tomorrow morning at 8 o'clock for the pre-market prep as we always are. Hope to see you there. And with that said, we wish you a green trading week. I'll see you in the next one.